All right, well, it's your money, and we are working for you to help you make the most of it. Of course, filing taxes as a senior citizen can be confusing because of multiple income sources, different tax rules, changing tax laws, and that's why we're looking to get your questions answered and maybe to provide some information that can help you make some informed decisions about finances.
I'd like to know how senior citizens can get a tax break on money they have earned as far as interest earned and have, I don't know, accumulated and invested all their lives. Why do we have to pay so much taxes on it?
Death and taxes, right? Justin Smith with Neely Accounting in Roanoke is here to explain. What kind of an answer would you have for her?
So the biggest thing that I would say is basically there's different timing for interest income and stuff like that if you have CDs or different types of investment vehicles. The biggest thing that I would say to do is if you can get those to span over a couple of years or something of that nature, just the timing of the event is what's kind of critical to basically break up that tax event.
Okay. On Facebook, John Haynes wants to know the following. He writes, as a retired person living on Social Security benefits, can I file and get a refund that isn't related to my income, that I don't have to pay taxes on, with myself only as the dependent?
So, I mean, from that, if you do have any ancillary income from Social Security, you would want to go ahead and report that because it could result in an IRS letter or something of that nature. I think one of the biggest things with that is Social Security is taxable at tiers. So you have 50%, 85%, and you also have a point where it could not be taxable at all. So
when is it not taxable at all?
So basically, when you don't have, so it's affected by your ancillary earned income or your investment income. So like the interest that we had talked about earlier.
Sure.
Any capital gains or stuff like that you have through investments. So at that point, it could push your Social Security to be taxable.
Got it. But if you're getting Social Security only, then you're less likely to pay a higher tax.
Correct. So if you just have Social Security income, you would not have a tax obligation on that. So,
okay, very good.
I mean, the biggest thing is when we have the market does well, we have qualified distributions and stuff like that. That is when you have a situation where your Social Security could become taxable.
You make a lot of money from your investments. The government says, "Oh, you make a lot more money than we thought. You've got to pay your share." Right?
And it's so we've been seeing a little bit of an influx this year with that. So it is. We've had some, diverse periods in the past. So the flip side of it is now we're getting back to, explaining to the clients, you've had a little bit more income this year, so this is where you're heading. And if we keep going like we're going for 25, we could be facing it again next year.
Okay. Anything else you would want seniors to know this time of year?
I mean, the biggest thing is plan ahead. Talk to your financial advisors. Look at breaking your tax period into multiple years if you can. There's the other situation where you can potentially, bring your income in. So basically you can have CDs that mature at different dates and stuff like that. So you have a situation where you're kind of spreading it out, and that's a key thing from the two topics we've talked about.
Okay, great. Justin Neely, thank you so much.
Yes, sir, anytime.